Welcome back to another episode of the Stoic Trading Psychology Podcast. Hope you guys are enjoying all of these podcasts. I know I don't release too many of them. I am trying to do more of them. I always appreciate your kind feedback, and I'm going to be trying to do more of them in the future. Not sure where you guys are finding these podcasts. If you are finding them on the podcast app, check out my YouTube channel at FX Telepath if you want forecasts for the market for Forex and other trading related tips. I'm sure some of you are here from my YouTube channel, and I appreciate you, and I definitely look forward to continuing to do more podcasts, especially since I've gotten a lot of positive feedback from you guys. So this podcast, we will be discussing, welcome back again to the Stoic Trading Psychology Podcast. This is the Mind Over Market series, and this podcast is about lowering your expectations. And to me, this is very, very important. This is vital. Like if I was going to say there was 5 things that you need to do to become a successful trader, maybe I'll do a podcast on that in the future. This is definitely one of them. And again, I like to relate trading to real life situations and scenarios to help you guys better understand. That's kind of what I like to do. It seems like you guys don't mind it either. And I'm going to be bringing up many different concepts and ideas hopefully throughout this podcast. And it's all done on a whim. The last podcast I did, it was the 5 tips to trading success or whatever. That was all, I read that out. But all these podcasts pretty much are just me going off a whim. I have notes that I write down, and I kind of just go over them here. So it is all off the cuff. So hopefully you guys appreciate that as well. Just talking from my 6 years of trading experience. So first of all, we need to all lower our expectations. Obviously, to take it to an extreme, I like to take things to an extreme to kind of hyper exaggerate the point. So let's say you came into trading. Let's say tomorrow you're like, I'm going to start trading and I'm going to take $100 and I'm going to turn it into $1 million. It's going to be so easy. I'm just going to retire tomorrow. That's an extreme example. I don't think anybody actually thinks that. However, there are definitely a lot of people that think they're going to take maybe $500 or $1,000 into, maybe 30 grand this year. And then maybe by next year, they'll turn that 30 grand to 100. And then the next year after that, they'll turn that 100 to a million. So it's going to be like 3 years, but they're going to be making a killing, right? There's people that think that. And that honestly, that's not too far behind, I'm going to turn into $1 million tomorrow. It's not, obviously it's completely exaggerated. But again, I like to do that to make a point. So we need to lower those expectations. And the reason why is because if you have high expectations, anything below that you get is not going to be anything. Like best case scenario, you deposit $100 or $500 into your trading account and you think you're going to turn it into 30 grand that year. Best case scenario, you make, if you deposit $500, best case scenario, you make $500 that year, right? 100% return. And I'm telling you right now, that ain't happening. It might. People that get those returns, they usually get lucky and they buy a stock, and they're not really trading. That's another thing I want to bring up too, is there's a lot of people who basically they're buying like the NASDAQ or the S&P 500 and like they don't really have a stop loss and they're never really shorting. They're always just kind of buying, and they call themselves traders, and like they are traders in a way. But it's a little bit different than what we do where we're shorting and we're not just, buying that. And like, trust me, buying the stock market's a great idea too. I totally agree with that, but it's not really trading. It's a little bit different, but anyways, again, back to lowering our expectations. So you can't be going into it expecting to get crazy results. And remember, best case scenario on a $500 account, you make $500 that year, and that's 100% return. 100% return is insane. And that's another thing people struggle with when they trade is if you're going to deposit $500 or $1,000 because that's all you have, that's fine. That's great. It's completely reasonable. Your goal is to learn with that capital. Then you earn. And I always tell people, get the best job you can, get the highest paying job you can, because if you do that while you learn with your small capital, if you can consistently make a small return or whatever it is, percentage-wise, always look at it as a percentage, then you can just deposit money from, again, your good-paying job. Because if you want to grow your account, let's say you make 100% return every year. Okay, so $500, that's all you can afford because you don't have a good job. Okay, $500 return. You make 100%. Now you're at 1,000. Okay, 100% next year. Okay, now you're at 2,000. 100% the year after that. Okay, now you're at 4,000. 100% the year after that. Now you're at 8,000. That's not really, again, you're not even going to get those returns. And that's how long it takes to grow that account. That's why it's good to have a good paying job. So this whole idea of growing a small account is basically just a marketing gimmick. And the whole idea of having a small account is to learn with it. And then you're going to be depositing money after. Once you're successful, maybe you'll come up with some sort of rule where if you're every 3 months, every quarter, whatever, every half a year, whatever you decide, or every year, if you do good, you're going to deposit this much money, right? That's why you have to have a good job. That's why I bring it up all the time. So please listen to me. Go out. If you don't have a good paying job, you need to get that now, or work towards that as well. And then trading could just be all a part of it. So anyways, moving on. So great example here. When I like to golf. That's one of my main hobbies, and play hockey too. When I golf, I don't go to the golf round expecting to break par. Why? Well, because I've never done it, right? So why you should not expect to make 50% this year trading is because you've never done it and you're just learning the game, right? It depends. If you're 2-3 years in, then maybe you can expect those results. So for example, I played golf when I was a kid and then I stopped for like 20 years. So I'm not counting that, but I basically picked it back up again. It was during COVID. I think it was like 2021, something like that. 2022, maybe 2022. So like I'm 3 years in and getting back into it. And I finally broke 80, which is big for me. So that breaking 80 was very big for me. I had a great ride. It was an amazing round. I shot a 79, just barely broke it. But again, before that, when I first started golfing, I was shooting in the hundreds, and then I started shooting in the 90s pretty quickly. I don't know, just because I'm pretty good. I'm athletic, I guess you could say, but started shooting in the 90s. Then I was like in the 80s for like a year and a half, and then finally broke the 80. And now I'm still in the 80s, really. Like I played golf again after breaking 80, and I shot like an 84 or something like that. So I finally broke through that kind of that whatever you call it, that milestone. And it's the same thing with trading, right? You're not going to get there right away. It's the same thing. And like I like the golf analogy, because golf is extremely difficult. I don't know if there's any golfers here. If you're in my group, send me a message, say, hey Kevin, I golf, or leave me a comment on my YouTube channel, say, hey, I'm a golfer too. I think it's a great analogy because it's one of the most difficult sports there is. I've played a lot of sports. It is so difficult. It's difficult, and here's why. Because golfing, you can make a really good shot. I played golf with my friend the other day. He's played 6 times, and he had some really, really terrible shots, obviously, and he had some really, really great shots. And I'm at the point where I went from maybe 70% of my shots were bad, obviously, when I first started again, and then to now, it's like, I would say maybe every round I only have maybe 5 bad shots all round. And when I say bad, I mean slicing to the left, slicing to the right, chunking it, topping the ball, whatever. Only 5 round. That's obviously helped me with my score and my golf game. And it's kind of the same thing with trading. So you can't, and I completely lost my train of thought, to be honest. But again, if you think you're going to break par, it's just ridiculous. You're not going to be doing that. If you think you're going to make 30% trading this year when you first started trading, it's not going to make sense. You're going to be at a certain level where maybe that certain level for you, when I was talking about golfing, I was shooting in the hundreds at first. Maybe that's you. You're losing just a small amount trading because you're not risking a ton. And then you go from losing a small amount to break even, which is maybe now you're shooting in the 90s, right? Just to compare it to golf. And again, it's such a good analogy because golf is extremely difficult, and so is trading. And again, it's about consistency. That's what I was trying to talk about. It's about consistency. Golf, you can hit an amazing shot, and then your next one could be absolutely garbage, and it destroys your entire hole or round, or whatever you want to call it, whatever you're thinking of it. Like it destroys that hole. It could destroy your whole round. But that's another good thing too, right? With psychology with golf. Every hole, you can almost treat, so there's 18 holes, you can almost treat every hole as a trade, right? Where like you're going to have some bad trades, right? Where they go against you or whatever, you're going to have some bad holes. But as long as you don't let it blow up, right? But by having a stop loss in, not revenge trading, then maybe you can recover, right? So great example, let's say you don't take the risk, you play, maybe you got yourself into trouble, you're in the trees. Don't try to shoot through the trees to get to the hole, because that could just make your bogey turn into a double bogey or a triple bogey. You just take your loss, chip out on the fairway, and try to get back onto the green from there. And maybe you're going to bogey that hole, and maybe you're going to take that loss on the trading account, but you're keeping that stop loss in play. You're not revenge trading. It's kind of the same thing. You're doing damage control by having that strong psychology, that strong stoic behavior when trading. It's your life support, really. So I think it's a great, again, golf and trading, it's a great analogy. Same with poker. It's really funny how things can just kind of be so connected like that, as far as like analogies go. So I have some notes here. We're going to look at some of these notes I have. So high expectations, they create pressure. So again, these are the notes I have. I am reading from some stuff. So if you want every trade to win, that's just an emotional roller coaster. You have to go into every trade saying, I don't know what's going to happen. It could easily be a win. It could easily be a loss. And you have to accept that. And again, that's only going to come with time. And expectations of fast success will lead to burnout as well. If you are learning to trade and then you start trading and then you think you're going to make 100% a year because you watch some guru on YouTube who's lying to you in the thumbnail for clickbait, you think you're going to do that good. After a month of not doing that good, you're going to be burnt out. You're going to be like, damn, this isn't working. This is stupid. You're going to quit. But if you already have the expectation of this is going to take a while, this can take years, this is a long game, then you're not going to be burnt out a month in or 2 months in, even 6 months in. You're not going to be burnt out because you understand that. And again, this reminder, the market does not care about your hopes. It only cares, well, it doesn't care, but it only reflects probabilities, really. So, and then we need to be letting go of outcomes, guys. We need to focus on the execution. Remember, we are learning first and then earning later, okay? So it is the process over the outcome. Master the process, the outcome will change. And again, it all ties in with having that good job, practicing, not risking much on your trade so you can stay in the game. And remember, your job is not to win, it's to follow your system. That's it. If your system is a losing system, then you shouldn't be doing it. If your system is a winning system that you have back tested and that you've tested, maybe through time, then your job is to follow that system and then you will win. That your job is not to win, it's to follow your system and then you will win. And then this is kind of a controversial one as well, but wins and losses are feedback. And a lot of times people are looking at their trades, they're analyzing the losses. I've seen people send me, in my Discord group, people send me trades where like, oh, why did this trade lose? And it's like, it's not even really a demand zone. And I'm like, okay, it's not even a zone, this is why. And then there's times where people send me a trade and it's a losing trade. Why did this lose? And I'm like, to me, this was a great trade. And it seemed like your higher time frame was aligned. The zone looked good. The basing was decent, strong move away, liquidity trap, whatever. And at the end of the day, guys, this is just a probability game. And sometimes you're just going to have losses and you just have to let go of that outcome. So you can't always be also analyzing everything. Oh, I think this is why it lost. Like the trade, the zone could look amazing, and then you could just blame it on and be like, oh, well, it's Friday, so everyone's, it's Friday, nobody's really trading, everyone's chilling, it's Friday, it's the summer, so now I'm not going to take trades on Friday. I would avoid doing that unless you have solid evidence and data to support that, and just accept that sometimes, basically every time you lose a trade, even and win a trade, just look at the trade, ask yourself this, is this in my plan? Does this make sense for a trade? If it does, like let's say you have 5 criteria and it ticks 4 out of 5. Not criteria, you don't have to have all criteria, but the 5 things you look for. If it ticks 4 out of 5, it just seems like it was a probability loss in the big scheme of things. If you look at your trade review and it's like, ooh, this basing wasn't really good and the move away actually wasn't as good as I thought, I kind of just hopped on this trade a little bit too early, or whatever your strategy is, then okay, then you need to write that down. That's your feedback. But again, not every loss is going to be some crazy reason that you're not seeing. Sometimes it's just going to be a loss. And the reason people think that every loss there's a reason is because they believe these people that show a 9-to-1 risk reward, 10-to-1 risk reward, and they say their win rate's like 70%. And it's just BS, and that's a big part of it too, is understanding a lot of these guys are straight up. I've always told people, if you're the people you are watching to learn from, if they are showing dollar amounts in their thumbnails, or even talking about it really, where $100 a day, or turn $500 into $50,000 or whatever, I would run far. So and lowering expectations, it's going to be our emotional support. I'm trying to think of, like, lowering expectations, it's going to help with your psychology, obviously. If you expect losses, you're not going to be shocked by them. If you expect imperfection, you forgive yourself faster. Detachment will give you clarity. You see setups as they are, not how you want them to be. So again, when you go into the day expecting, when I go play golf, I'm expecting, okay, I'm gonna get some bogeys, and I'm probably gonna have a double bogey, and if I get a par and a birdie, great. I'm just gonna go into this round, every shot, I'm just gonna try to do my shot routine, just take every shot one at a time, and that's not all gonna be perfect, and I'm not gonna be frustrated. And that's a big thing with golf too, where you can get frustrated after a shot. And it's the same. It's literally the same with trading. You can get frustrated after a bad trade or a bad shot, right? And if you go into it expecting it's just going to be a little bit worse. And remember, you're never going to be able to stop that emotion, right? I could literally, I'm walking up to the ball, I grab my 7-iron, whatever club I'm using, look down at the ball. I think this could be a bad shot, and I'm not going to be frustrated if it is a bad shot. And then a second later, I do my shot routine, and then I take the shot and it's a bad shot. Immediately, I'm going to be upset. It's just how it is. I'm going to be like, damn it. Like, I'm going to probably swear in my head, right? But the difference will be, how quick are you going to turn that off and just get to the next shot? That's the difference. You're never going to not be upset after a loss. It's all about how quickly you can just forget about it and move on to the next one. So it's kind of a big lie where everyone says, "Oh, you're going to you're going to love losing," or whatever. I don't think anybody says that, but it's kind of this thing where people think losing is going to be great and you're not going to be upset. No, you're going to be upset. It's just you're going to quickly get over it. That's going to be the difference with what separates you and the other traders out there who cannot handle that. I think it's super important to think about that every time. And one thing I'm trying to do lately too is when I turn my car on, it's just immediately say, people are terrible drivers. It's going to be ridiculous. Take it easy, slow down. People are dumb. They're going to cut in front of you. People are crazy. Just, don't get mad. I'm trying to tell myself that lately when I get in the car. So these are great tips. This is great life advice too, I'm giving you guys here. So it's kind of a double whammy. It's great trading advice and it's great life advice too. Just the Stoic philosophy. So, and again, guys, get the Meditations by Marcus Aurelius. Get that physical book. Get 2 copies. Get one nice copy, and then get another copy where you can highlight, underline, put notes in, and then study that book. I'm telling you, it's a game changer. And remember, guys, if you guys aren't subscribed to my YouTube channel, make sure you subscribe over at FX Telepath. Tons of tip videos over there that can definitely help with your trading. And then we got some practical tips here. Expect nothing, but prepare for everything. So prepare for everything. Prepare for a win. Prepare for a loss. We also need to track our execution, not just your P&L. If you have a hard time, and that's the other thing too. When you first get into trading, it's crazy. It's gonna be you're taking too many trades, and then you need to relax, and then you're gonna fail to pull the trigger on a couple of trades, and you're like, damn, it's funny how it works. So we need to make sure you are executing properly as well. And then create a mantra, right? Did I follow the plan? I think that's a great thing to ask yourself after every trade. Did I follow the plan? And that will help, just asking yourself, that will help you determine if you followed the plan or if it's just that loss in the grand scheme of things, right? And that's a big problem when people think every trade needs to be hyper analyzed. And And a lot of that is just these gurus, these fake gurus out there just trying to overcomplicate every single thing, where it's like, oh, you didn't see that low liquidity search there, or whatever the heck they're talking about. I have no idea. And sometimes, again, there's going to be zones that you shouldn't have taken, or trades you shouldn't have taken, and that's fine. But again, we have to zoom out sometimes and think of 100 trades. Is this trade just a loss in 100 trades, and I'm going to be taking this trade over again, or is this actually a bad trade? And again, every day we have to think, every time you place a trade, try to tell yourself, this is just one trade in a 100 trade block or a 50 trade block. Think about it in blocks, whether you want to go 50 trades or 100 trades or even just a weekly block. This is just one trade throughout the week. So if it's a loser, who cares, right? Try to think of it like that. Lower your expectations. That's basically the theme of this whole podcast, and I'm hoping you guys are starting to understand the importance of that, and taking it to the extreme. Like I said, you can't expect the craziest stuff, so don't expect stuff like this where people think they're going to make 30% trading in their first year, and they will be humbled. I promise you that. And remember, this game can take years. I've read people, I give them credit where it's like, I don't even remember, like I've seen it on Reddit or something where 5 years later I'm finally profitable, right? 5 years, think about that. That's crazy. I personally don't think it needs to take that long. I think that person was probably struggling with psychology aspect of trading, which is why we are here doing this podcast. Because again, I can give you guys tips all day, trading tips. I could literally do signals on my account for every trade I take, and it won't matter if you cannot psychologically handle the trades that I am taking. Because a lot of times I'm buying when price is absolutely tanking, and that might be when you don't want to buy, because if you think about it, everybody feels most comfortable buying usually when price is trending up, not when price is trending down, and they don't really understand multiple time frame analysis either. That's a big problem as well. But again, I could give you guys signals. I could be holding a 5 to 1 because I feel like that's how much we can get out of the market, and you might sell at 3 to 1, and that's still a win, right? But the next 3 trades might be a loss, and then now you're at break even and I'm at plus 2% because price went to the 5 to 1 take profit. That's the difference. That's why psychology is so important. That's why signals are stupid. And not only that, I'm pretty sure they're illegal as well. And from my understanding, it's a complete and utter financial advice telling people this is where your stop loss goes, this is where your take profit is. So there's that as well. And it's not about learning, right? This is when I first started my channel and just everything I first started just to document my own journey, but when people first started to like my stuff, I thought, the whole point of this was to be honest and to be realistic. And trust me, my channel would probably be doing way better if I showed my face, I put $5 to $50,000 profit, make $300 a day trading, crap like that. Shocked face thumbnails, things like that. If I did that, my channel would be doing way better, and that's fine. That's not why I'm here. My channel is doing great. I'm happy with everything. Happy that you guys are learning from everybody. Seems to be liking my stuff. So that's why I'm doing this. And again, my channel will be doing way better. I could probably have 100,000 subscribers right now if I did that stuff. But again, it's just not. It's not right, and a lot of it's just clickbait. The concept of you're going to make $100 a day trading it's like a borderline scam. Like, it's not a scam, but it's like nobody is going to do that. You know what I mean? It's just something like, you could make roughly $100 a day trading if you're really good, and like over the long run, like it might equal out to $100 a day, but like that's not obviously what they're selling. They're selling the concept of like, you're going to go into the market, you're going to take $100 from the market, and it is going to be in your account, and like, you know what I mean? So it's just not realistic, and the whole point of my brand, I guess you could call it, is to make trading more realistic, and that is why I do forecasts as well, because they are public forecasts where I cannot go in. If my forecast was terrible 3 weeks ago, I was completely and utterly wrong, I had never deleted them, never deleted a single forecast, and it is objectively true that I cannot go in there and edit that forecast to change it, to make it seem like I was right. But you know what you can edit? Financial statements, live broker logins, all that stuff is completely and utterly fakeable. So it's like, a lot of these people are not doing these forecasts and stuff like that, which in my opinion is important. It's all about being realistic, right? If you don't have a good paying job where you can deposit money into your trading account when you do get successful, if you don't have the Stoic philosophy mindset when it comes to trading, meaning you're going to learn first and earn later, taking it slow, being stoic, not getting upset, not getting too over happy when you win, and be making reckless decisions. Then if you don't have all of those things combined in a good back-tested strategy, if you don't have all of those things, like, you need all of these things to be a trader. You can't just have one out of four. You need all of them to be a successful trader. And that's why I'm here. That's why I keep doing these podcasts. That's why I'm going to try to keep doing the podcast, keep doing the tip videos, and I'm trying to build my brand, I guess, in the sense of like making, like, my brand is about bringing realistic trading goals back. That's what I think is the best thing we need to be doing as a community. That's why I'm trying to grow the community with these realistic ideas, and it's crazy how many people join my group. They're like, oh yeah, I paid $2,000 for this guy's course. I'm like, $2,000 for a course, probably on trend lines, where, again, it could be the most profitable system ever, but if you don't have the psychology background and the Stoic psychology mindset, it's not going to work out. So it's like, it's insane to charge that much, and that's why I'm trying to keep things more realistic. So I hope you guys appreciate that. I feel like I've just been rambling on the last 7 minutes. So we're going to wrap this up here, guys. Appreciate everybody tuning into these podcasts. Would appreciate a 5-star review. Check out my YouTube channel at FX Telepath to follow along with my forecast every single week. And I will see everybody in the next podcast.